Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about DFZQ interim report. Orient Securities Company Limited provides a wide range of businesses and services to its clients. These include securities brokerage, financial products, investment advisory, margin financing, and securities lending, asset management, futures, services, stock underwriting, and sponsoring, bond underwriting, financial advisory, alternative investment market, making, research services, custodian business, proprietary investment in equity, fixed income, commodities and foreign exchange, OTC derivatives, and FICC agency services, commodity and financial futures, brokerage, investment advisory, equity, asset, investment, securities asset, and fund management, private equity, bond, industrial, financial asset, and securities investment, credit operations, securities underwriting, corporate finance advisory services, foreign exchange broking, and dealing, software development services. The stock price skyrocket, a multifaceted analysis over the past year. Orient Securities Co. Limited, DFZQ, has witnessed a remarkable surge in its stock price, with a 189.63% increase from its lowest point. Several key factors have contributed to this substantial rise. Firstly, DFZQ's strong financial performance has been a significant driver of investor confidence. The company reported a 64% increase in profit attributable to shareholders for the first half of 2025, fueling optimism about future growth prospects. Secondly, positive market outlooks and research have played a crucial role. Orient Securities' optimistic research reports on sectors like composite materials and machinery equipment have reinforced investor enthusiasm. Thirdly, increased foreign investment in Chinese stocks has also contributed to DFZQ's stock price appreciation. International investors are drawn to China's rebounding stock market, supportive government policies, and leadership in technology segments such as humanoid robotics. Lastly, institutional holdings have provided further support for the company's stock price. eFund Management Co. Limited's increased holdings of DFZQ's 8 shares demonstrate institutional confidence in the company's growth prospects. These interconnected factors, robust earnings, positive analyst sentiment, strategic industry focus, and foreign investment inflows, have collectively underpinned the significant appreciation of DFZQ's stock price over the last year. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth drivers: increased sales of securities investment funds and other financial products, expansion of business operations in equity financing, science and technology innovation bonds, and other areas, growing scale of brokerage, proprietary trading, margin financing, and securities lending businesses, rising interest income from providing financial products or services to customers, accelerated wealth management transformation, and improved customer quality, increased international expansion, and operational innovation. Revenue decline drivers: stricter regulation and intensified competition in the market, reduced exchange rebates, and decreased interest income from certain sources, decreased business and management fees. Net income and profit margins experienced significant fluctuations over the period. Initially, net income increased by 64.02% from RMB 2,111,371 to RMB 3,463,071, driven by improved profitability in various business segments. This growth was sustained with a year-over-year increase of 22.33%. However, profit margins faced some setbacks, including a decrease due to changes in scope of consolidation. Despite these challenges, operating and net profit margins still showed notable improvements, rising from 23.37% to 34.83% and 21.73% to 28.04%, respectively. These gains were attributed to enhanced profitability in key areas such as brokerage, proprietary trading, margin financing, and securities lending businesses. The wealth and asset management segment saw a significant increase of 10.9 percentage points in profit margins, while the investment banking and alternative investment segment experienced an even more substantial rise of 50.61 percentage points. These developments underscored the company's efforts to optimize its business operations and capitalize on emerging opportunities. The company's financial performance indicates a consistent trend of generating positive operating cash flow. For the years 2025 and 2024, the operating cash flows before movements in working capital were RMB 2,576,889 and RMB 917,566 respectively, both of which are positive figures. This suggests that the company is able to generate sufficient cash from its core operations to cover its expenses and invest in growth initiatives. The company's financial performance has undergone significant changes in terms of debt levels and interest expenses. According to the financial summary, total liabilities have increased by 4.7% from RMB 336,336,559 to RMB 352,523,191. This increase is consistent with a rise in borrowings of plus 13.3%. However, there are conflicting reports on interest expenses, with some pages indicating an increase and others showing a decrease. Nonetheless, one clear trend is that interest expenses have increased significantly, with a notable jump of plus 683% from RMB 31,000 to RMB 244,000. This substantial rise in interest expenses may be related to the company's growing debt level. The company's financial performance varied across different segments and regions. The Wealth and Asset Management segment, Institutions and Sales Trading segment, Comprehensive Wealth Management Business System, and Comprehensive Institutional Business System all performed well. Additionally, the International segment and Wealth Banking and Alternative Investment also showed strong performance. On the other hand, the Investment Banking and Alternative Investment segment, International and Other Businesses segment, Comprehensive Investment Banking Business System, and Investment segment struggled to meet expectations. These segments will require attention and improvement strategies to enhance overall financial performance. Management is optimistic about the company's outlook due to market rebound and rising trading activity. The company will focus on 5 major areas: technology finance, green finance, inclusive finance, pension finance, and digital finance. A new 3-year strategic plan aims to make the company a first-class modern investment bank through comprehensive wealth management, comprehensive investment banking, and comprehensive institutional business. The company is also driving high-quality growth in its fund investment advisory business by enhancing product offerings, investment strategies, and service capabilities. Management will adhere to the guidance of the action plan for promoting high-quality development of public funds and expedite the development of a first-class investment institution. Additionally, management is committed to becoming a first-class integrated derivatives service provider with whole lifecycle risk management capabilities. The company will focus on technological innovation and mergers and acquisitions, as well as strengthening its competitive edge in 2 strategic areas. Technology and energy. Management aims to redirect financial resources toward the sci-tech innovation sector by increasing primary and secondary market investments in STI bonds and expanding market-making business. Overall, the company's outlook is positive due to deepening institutional reforms in China's capital market, with a focus on technological innovation and growth. The company has a history of paying dividends to its shareholders. The total amount of cash dividends distributed is significant, with figures ranging from RMB 255 million to RMB 1.478 billion across different years. This indicates that the company has consistently returned value to its investors through dividend payments. That concludes the financial summary for DFZQ. Feel free to comment below, and I will be happy to answer them when possible.